Hello and welcome to this video on how to build a solid investment portfolio from scratch. Investing can seem intimidating at first, especially if you're just starting out and don't have a lot of experience. But don't worry, building a solid investment portfolio is not as difficult as it may seem. With a little bit of knowledge and planning, you can create a portfolio that will help you reach your financial goals and give you peace of mind. Before we get started, it's important to understand that there is no one-size-fits-all approach to investing. What works for one person may not work for another. It's important to do your own research and find an investment strategy that aligns with your own financial goals and risk tolerance. So, where do you begin? The first step is to determine your financial goals. Do you want to save for retirement, a down payment on a house, or some other big financial goal? It's important to have a clear idea of what you're saving for, as this will help guide your investment decisions. Next, you'll want to assess your risk tolerance. This is the amount of risk that you're comfortable taking with your investments. Some people are more comfortable with a higher level of risk, while others prefer a more conservative approach. Your risk tolerance can be influenced by factors such as your age, financial goals, and personal temperament. Once you have a clear idea of your financial goals and risk tolerance, it's time to start building your portfolio. A diversified portfolio is typically considered the most effective way to manage risk, as it spreads your investments across a variety of asset classes. This can include stocks, bonds, real estate, and other types of assets. One way to create a diversified portfolio is to use the asset allocation approach. This involves dividing your investments among different asset classes in a way that aligns with your financial goals and risk tolerance. For example, if you're a younger investor with a long-term horizon and a high risk tolerance, you might allocate a larger portion of your portfolio to stocks. On the other hand, if you're an older investor with a shorter time horizon and a lower risk tolerance, you might allocate a larger portion of your portfolio to bonds. It's also important to regularly review and adjust your portfolio to make sure it's still aligned with your financial goals and risk tolerance. As your circumstances change, so should your investment strategy. In addition to asset allocation, there are other strategies that you can use to build a solid investment portfolio. For example, dollar cost averaging is a technique that involves investing a fixed amount of money at regular intervals, rather than all at once. This can help you manage risk by buying investments at different prices, rather than trying to time the market. Another strategy is to invest in index funds, which are mutual funds that track the performance of a specific market index, such as the S&P 500. Index funds offer a low-cost, diversified way to invest, and they're often considered a good option for long-term investors. Finally, it's important to remember that investing carries some level of risk. While it's possible to earn a high return on your investments, it's also possible to lose money. It's important to be prepared for the possibility of losses and to have a plan in place to manage them. In summary, building a solid investment portfolio from scratch is not as daunting as it may seem. By setting clear financial goals, assessing your risk tolerance, and using strategies like asset allocation and dollar cost averaging, you can create a portfolio that helps you reach your financial goals and gives you peace of mind. Thanks for watching, and happy investing!